Good morning, guys. How's the audio and video this morning? Okay. Okay, great. So let's kind of get started. We've actually had an interesting pre-market. Looks like we've taken a 10-point almost round trip at this point. So quickly, yesterday we did end up with a balanced day. I wasn't able to do the trade review, and that's not uncommon after having a long liquidation day, which is what we had on Monday. It's also not uncommon to have those lows retested, which I believe we got actually all the way down this morning. Let me see. We got close. We didn't quite get the lows. I believe 33.5 was the low. We had 34.25. So two things. First of all, top of the hour at 9 a.m. Central Time, 10 a.m. Eastern, we have ISM numbers coming out that generally can move the market. The market's become much more volatile. I noticed the other day on econ numbers being released. I think the reason for that is because we are in a tapering phase of QE. And whereas previously econ data has not had that big an impact, as you'll recall on Monday, right? Whatever economic number came out, I don't follow them that closely, but whatever econ number came out essentially started a trend day down, right? In those first, we had two heavy red sticks followed by a third small one, and essentially a little recovery and then down all day long. We can have the inverse of that, which means that there's been an increased risk in trading in front of that econ data. And so you need to be aware of the increased risk and look at your trade plan, right? If your trade plan calls for taking a trade in front of econ, just realize you might get stopped really quick, particularly if it gets whippy like it already is this morning. And just emotionally prepare yourself to get stopped and or have a very large gain very, very quickly. Okay, so enough said on that. I think it's a small change that I've noticed, but it can make a big difference in your P&L. The other thing, for a balanced day yesterday, let me try to pull up yesterday's charts here real quick if I can. Let's see, I had I need 04. You know what? I put the 6th on the charts this morning. I apologize. I'll get that corrected. I forgot that I finished these out after midnight last night. Okay, so the first thing that I want to point out is that even though we were having a balanced day, look at the range. The range went from essentially 53 all the way down to 39. Okay, that's a 14-point range. Now, prior, when we were all the way back up at the highs, we were experiencing 14-point ranges as a normal day, particularly late December, early January, right? And that was on a good day. The balance days were much tighter. They were under 10 points, 8, 10 points. So what that tells me is that the balance day is still, 13, 14, 15 points. That directional days are still going to lean towards those. I'm going to assume that directional days up and down are going to have at least 20 points of range. So I'm therefore going to go ahead and maintain instead of the 6-point rotation, preferring a 7 or 8-point rotation into the zones to keep me on the safe side. If we don't get that, that will keep me out of trades, right? But if I'm going to make a mistake in trading, I want to make a mistake of, I didn't get my fill versus I was in early and got stopped out and have to get another trade to another trade or two just to get back to profitability. So I'm going to maintain that 7 or 8-point rotation into today, and I'll probably maintain it going forward until I see the volatility and the ranges come back and get narrow, and they may not. So that being said, are we still recovering, and what is the upside and downside? So let's look at how today could play out. Let's start with ES. So we know that there's responsive buyers from this morning's pre-market action. And excuse me, I didn't get my drawing tool out. Okay, so we know we had the low right down here at 34.50, right in here, okay? And it looks like we're shooting for an open right about here. So we've already in pre-market essentially broken yesterday's lows, come down for a test, and it looks like right? A potential trap trade. All that means is when we get a trap trade, that often, not always, that'll result in a traveling to the other end of the range, right? Also, on days after long liquidations, it's possible to have 2 or 3 days of balance. So we can get 2 or 3 days of trading like this. So what are the characteristics if we're going to get balance, right? First of all, it gets very choppy, both in the morning and the afternoon, and the rotations up, even though they did have good rotations, were very choppy. And where we opened turns out to be, right, the middle of the zone, at least in the morning, turned out to be a very poor place to place a trade, right? Where were the good places to place a trade? At the extremes on either end of this market. And late in the day, the middle of the range turned out to be an okay place to place a trade, right? Because on balance days, I expect us to trade back to the middle. But generally, taking a trade in the middle for a move back up is awful because it wouldn't take very much to come back and test the bottom of the range again and then move right back in. So if I identify it as a balanced day, and usually I can do that within the first hour, right? The middle of that range is the last place I want to take a trade, and instead I want to focus on the extremes with good rotations up. Also, notice the midday, because we were in balance, notice how much chop took place. It took an incredible amount of patience to make that work. So enough being said there. If we're opening at approximately this 42.75, then the first thing I'm looking at is where would 8-point rotations put me? Well, approximately at a test of yesterday's high, but also if I need a test to the downside, right? That means that my nearest location for a high odds setup for me is going to be all the way down at Monday's low. Now, if I'm aggressive, I'll take the first test at Tuesday's low, but considering pre-market, we've already broken that and traded back up through, I'm always hesitant when I see action that whips through like this on a zone. It always makes me hesitant on a particular area as far as wanting to take a trade in that location. Can it work? Yes. Are the odds of getting stopped out higher or having it simply blow through without any reaction higher? Absolutely. Also, when you combine that with very little rotation at this area, I probably will not take a trade at all here unless I have a different type of setup, a scalping setup. But again, unlikely that I do anything here. So what that sets up is if I'm willing to take a trade here, that means this location and each of these locations above, right, create attractive areas. How will I determine whether I'm going to take this 51.53 area or this 56.58? I'm going to look for a swing low on a 5-minute chart, and I'm going to determine where in this area I'm going to take a trade. In other words, if I sit here and I consolidate and then I move up, let's say from 44 and 8 puts me at 54. That means the only place I'll be willing to take this trade right here is at the back of the zone. And I'll definitely, if I get this consolidation here, be willing to take a trade here and take a trade here to the downside in each zone above. You'll also notice that this entire area up here, really from 56.58, 60.62, and 64.66. So this was the area that held last week when we tested the lows. We came down and, if you'll recall, I forget if it was Tuesday or Thursday, we pre-market, we hit the 60 level. By the open, we were at 64.66, and we kept going from there. And prior to that, we had a down day where we came into 64.66 and responded. I would definitely expect and would try to stick a responsive sell from this area. But this entire thing, really from 56 all the way up to 66, I will try to launch trailers for a swing trade out of all of these levels. Okay. On the downside, areas I'll be looking to take long, assuming that I get at least a 7-point rotation. Tuesday's low, I'll expect to find responsive sellers there the second time. Remember, we've technically tested that pre-market, and it had a pretty strong snap. And I believe, at least the first time in, that those same responsive buyers will try to defend again. If it doesn't snap quickly out of this zone, I get in. And probably if it takes more than 10 minutes to get my 2 points, I will probably bail on this trade here. Again, you got to consider, I have to consider it relative to the time of open that we've already had a first test. And so essentially I'm going to count this as a second test. First time in during the RTH, so I'll still take it, but I will be ready to take this trade out if I can't get a quick rotation up. Again, assuming the proper rotation, I will take a trade here. Particularly these two areas here. Monday's, excuse me, I stand corrected. Everything I just said about that goes down here on Monday's low. So I stand corrected. And by the way, the Globex low is just above it. I'll have to adjust this zone at 34 and change. So everything from here down to here, I will take the first time in. But again, I need a quick response or I'm going to bail on the trade. I will take a trade at this 26 to 28 level. This is an important level. If you'll go back and look historically, meaning all the way back into, I believe, November, if I've got it right. I might be wrong about that, but we have both rejected down and rejected back up out of this level, particularly the first time in to this zone. I would expect to find responsive buyers here. Specifically, 27 is the actual level that everyone's looking at. And by the way, everyone and their brother knows this level is important. So that means one of two things. We're either going to, again, reject very quickly, right? Or we're going to pass through very quickly. And that's the danger in this zone. But with the proper stretch, I am willing to take that chance for a rotation higher. The next area is this 19 to 22. This is an open gap down here. And again, I will stick to trade from this level, and I would expect responsive buyers. And I would expect that if we get down to this level, that we could certainly push all the way back up, certainly into this 26, 28. And if we can get above, we can get back to Monday's low. Now, here's the question. If we get down here, if we can get back above Monday's low, that will create a trap trade that can push us all the way back up to 1740. Remember, our ranges have been very wide. It wouldn't take a lot volatility-wise, right, to go down 10 or 15 points and then recover that 10 or 15 points again in the afternoon. That takes us back to a market that we had probably a year and a half ago where we were having days like this. We open up, we push up, push all the way down, and then in the afternoon we trickle up, and then they would push it all the way back up. This is not an uncommon pattern to expect. There's a lot of uncertainty going around the market right now in both directions, right? And there's clearly a huge dogfight as we're pushing up 1743 at this point towards the overnight highs. There's a lot of crisscrossing information, a lot of information that's pushing the markets around from outside of the United States, meaning other economies and other information. A great example of that is yesterday afternoon when we got that sweep to the downside in the last half hour. That was based on some stupid news on Puerto Rico's junk bond being downgraded to junk. And when's the last time Puerto Rico affected anyone's earnings? No one. It doesn't matter. But the market's reaction to that, because people are clearly nervous, was to sweep the market down and then just as quickly sweep it back up and then turn back around and sweep it back down. It's that kind of action that if you're trying to trade in that environment and you're not spot on your entries and exits, that you can crush your equity, right? How does that work? Simply, you take a long here in the middle thinking, oh, we're going to break back up and then we'll squeeze to the upside. You pause for a second, the next thing you know, it slams right back against you before you're prepared to take any action. Which traders does this type of action, this whipsaw right here, hurt? It hurts traders without a plan for entry and exit and who can't stick to it, right? It hurts traders who chase momentum, and it actually benefits traders who are willing to buy good rotations down and sell automatically rotations up, i.e. it benefits my style of trading very much. We've gone from a market, the shift has gone from a market where we open, mess around a little bit, and shoot straight up, where people, inexperienced traders can make a ton of money in this because basically all they have to do is buy, right? And then patiently wait, eventually get the drive higher. We've gone from that to this, okay? And this kills traders who cannot position or wait for the market to come to them. Okay, so let's go through and count what we're looking at off the open to determine which way we're going. First thing I'm on the guard for, out of the gate, 3 bars up, solid bars up like this, or 3 solid bars down. It does not necessarily mean we have a trend day. It can simply be a range extension, right? Where we go up and balance the rest of the day. Something similar to yesterday, only with a big open drive, right? Second scenario is we open up and we truly just trend up all day, right? And then the third one is we open up, we balance, and then we have a failed range extension back to the downside where it either comes back halfway or it comes back all the way and we trade to the downside. We haven't seen this pattern yet, but I have a feeling it's coming one of these days. It'll really shock a lot of traders who think once we've started this way that we either balance or we move higher. Very few traders, particularly in the last year or so, are accustomed to these open drives up, completely reversing. I would not be surprised to see this come out in the playbook in the near future. It kind of feels like we're heading that way with the volatility. These same patterns that I just identified can be seen on the downside. Okay, so those are the open drive scenarios, right? What will be accompanied by these open drive scenarios? Very small counter rotations, less than 2 points. And when we get to zones, instead of rejecting out, we'll tend to pause inside those zones, right? And then bust up. So clients, please remember your time limit rules for coming out of a trade. And yes, that applies even in midday. If you're wrong or it actually rolls over like it did yesterday afternoon, look at your trade plan, look at your stats on your spreadsheets, and determine, is it worth me waiting past 25 minutes, right? Does that still hold me in that 70, even 80% level of success? Or does that cause me more pain over time than it does reward? And that's what you have to look at. Also, please keep considering in mind, even if you don't get your trade, that it's an endless stream of trades, right? You're not running out of time. You're not running out of trading opportunities. Even if you're limited in the amount of hours you can trade during the day, additional trades will be here tomorrow. It happens every day. We all disagree on how this market should operate, and therefore we constantly get great trading opportunities. And this random news coming out from around the world creates even better opportunities for us, right? So those are the two scenarios where we'll end up with, and again, remember time of day. Market tends, if it's going to reverse, to do so in this 10 to 12 o'clock range. And if you're going to take a counter trade and try to make it stick and you have one of these scenarios, it's best to look for an entry in that 10 to 12 o'clock area. And again, it doesn't mean that you'll get it. It could simply keep driving up against you. Look at your trade plan, determine what you're going to do on an open drive scenario prior to the open, and then execute your plan flawlessly, both your stops, your entries, and your exits. Moving over to the balance scenario. Okay, so it looks like we're still balancing right here at this 43. This is the white zone for today, okay? In order to get any upside, it is critical that we stay below, or if we get above, get back below this point. Otherwise, above here, buyers are in control and we can easily drive up into initial resistance, even if that drive is a slow rotation up, right, in a balanced day scenario. A lot of balanced day scenarios will have this, where we come up, we break the prior day's high or low, balance in there, get back below, and then we come back to the other end of the range, and we end up closing right back in the middle, just like we did yesterday, right? We pushed down, we pushed up, we closed right back in the middle. I would not be surprised to see a second day of this. Also, this level right here, this it looks like that low there was, I guess, 32. It needs to get retested now. Whether it gets retested today, tomorrow, the end of the week, or next month, I have no idea. But it's begging to get tested. I also think, in terms of shakedown and shake weak hands, I think it's highly likely that we test this area and this area. And that scenario could simply look like we come, we break down, people panic out. Hopefully this happens in the morning, right? And prior to 11 a.m., we shake all the way down. And then we kind of do one of these jobs, right, where we come all the way back up in reverse. I have a feeling that a day like that's due. So how will I know if this is going to occur at all, right? So let's look at that. At the 17, given that we're opening at 1742, right? So my first clue is this is a gap fill, by the way, as well as being the white zone. So we open 42, we come up into the white zone, and we reject out. When we come down to Tuesday's low, we find responsive buyers, but we already know the zone's been traded, so we may simply come in, have a small rotation, then break lower. And then we come down to test Globex lows, which I believe right now are sitting at 34.25. This is already a nice rotation here, right? If we trade 44 down to 34, it's 10 points, but our ranges, right, have been closer to 15 points even on balance days, right? That would easily push us down to right here in that scenario. before we find our first, what I would say, substantial response here, right? And even here, at this point, the test becomes, do we get back above Monday's low for a test, or do we reject out, come for a second shot, and then eventually work our way to initial support, and then we go through that exact same process again. Once we get here, I would expect responsive sellers the first time. If we get back above this point, I think it's highly likely that we trade up into Monday's low again, and when we get above Monday's low, they could drive us right back up to where we're sitting right now. I expect this response the first time down into these areas. Conversely, if we get above initial response, this was our breakdown point, the 60.62 that started this drive lower, and 64.66 is where we held during the RTH every single time. I would expect to find responsive sellers. So even if we drive up slowly into that area from these three levels, I would expect a potential reversal point back to the downside. For most of my clients, guys, as y'all know, the focus is simply getting the 2 points. For my guys that have trailers, these are the locations, right, that we want to attempt to leave trailers from, right? Everything else that's inside of here, unless you're extremely aggressive and you want to take a trade from the white zone, I might leave a trailer from there. But everything else, primary focus is on 2 points. Secondly, even if you think this scenario is going to happen, remember the trade plan calls for us to fall into it, right? So you need to decide before the open, are you going to leave your trade at, are you going to leave the original break even? Are you going to move it to net break even, meaning you use your profits against the remaining portion and then adjust that stop so that you end up at net zero if the trade comes back, right? Or are you going to move it back to true break even on your entry and therefore retain the profit from the first half or first quarter or first 2/3, however you're managing the trade, of that trade. Also remember, as we push further into the day, okay, I reduce trading size after 11 a.m. Okay, I'm not trading. My highest volumes on my first 2 trades. My lowest volume, if I take trades in the afternoon, comes in the last hour. Why? My risk increases after 10:30 a.m. There's fewer participants, okay? And if I'm going to be wrong, I don't want to jeopardize my highest odds area. The highest odds area is always prior to 10:30 a.m. It's the easiest time to trade. It's the easiest time to get that reaction. So keep all of that in mind. Hold on a second. Chad, I don't try to think it through that hard. I just take it day by day. We had a balanced day. I expected a balanced day after a directional move. And so I'll address that in just 1 second. It's a good point. He wanted to know whether yesterday was simply refueling sellers, was the pause that refuels sellers, and that we're just going to continue to the downside, which is certainly a possibility, right? And again, going through these scenarios is what will let the market reveal which scenario it's going to follow. But due to the way that we trade the zones, or I trade the zones, it kind of falls into the scenario will play out and fall into my setups, right, with the right rotation. Hopefully, even if we have a downside move like we did the other day, right, almost all my trades, with the exception of 2 NQ trades, almost all my trades were to the long side, and it was a highly profitable day. So my hope is primarily is that we maintain this volatility. It makes it much easier to get my profits, and I don't particularly care which way they drive it, as long as we get good rotations at each level, up or down. My primary focus is going to be on contra trades because it's simply hard for me to get in line with the trend due to my trading style. So the other thing that I'm going to keep an eye on, right, I want to see what NQ is doing. NQ has led this market both up and down. It led yesterday to the upside. I'll be keeping an eye on it. Again, in NQ, rotation size. We've been having 60-point moves to 30-point moves. Those have been the rotations. I'm bumping my 10-point rotation to a 15-point rotation, right, because I want to stay on the safe side for my scalps. And then for my larger trades where I use my trade zones, I would prefer to have a 30 and then a 60-point rotation in order to take those trades. So let's go over and look at the volume profile and see where we're at on this thing real quick. That's my primary scenario, and the scenario is much the same on NQ. We came down overnight. Excuse me, this is 34.37 level. Let me confirm that I have that correct. That's correct. 34.37 and quarter was the low. That did not, unlike in ES, right? We did not push down to the swing lows from Monday. Okay, so the first thing that tells me is that NQ has more interested buyers than ES does. It's stronger, which is not shocking at all. The other key issue here, we need to get above this point, which is essentially the midpoint of yesterday's range, right? Otherwise, sellers are in control. So if we get responsive buyers, right now we're trading at 34.51. That puts us right here. We've rejected out of this 34.55. If we're unable to get out above that 34.55, I would expect a retest of Tuesday's low, and more importantly, right, a retest of the Globex lows. If I can't get a test of the Globex lows, but I do get a test of Tuesday's lows and I get responsive buyers there and we don't come back down, that would be a sign of strength. And I would not be shocked to see it push up towards yesterday's highs or higher. Okay. Again, you would think that the long liquidation day would cause damage, but let's look at that if that's true. The same scenario as I set up, by the way, for ES, I'll be looking for an NQ, meaning these are the zones that I'm truly looking to place positions based on leaving trailers and getting larger moves, right? Here and here. And here and here. It's a little bit difficult simply to call them ahead of time and say I'll automatically take these, but I will be keeping my eye very closely on those levels that I just pointed out for placing positions where I'd look to leave trailers for larger swings, meaning in this case, at least getting half of it to a 10-point rotation up. I still will scale anywhere from 3 to 6 points will still be my first scale on these. And then I will use that at these levels to get to net zero, okay, meaning I'm willing to risk giving back my profits from the first half of the trade to move my stop back and hopefully survive any rotation back down. Obviously, that means that if we're going to rotate all the way down to this point, I would end up giving back my profits from the first trade. You need to decide whether that's the right strategy for you and whether that plays out long term. For me, that works, but you need to decide what's right for you both from a psychological standpoint and emotional standpoint. Can you handle giving back profits afterwards, or does it feel like it's killing you? If it feels like it's killing you, obviously the answer is just leave it at net break even. At your entry break even, so you retain profits from half the trade. Again, it depends on your profile, not mine. You need to trade your trade plan, not my trade plan, because each of us are different. And the beauty about this is there's so many options on trading it. But what helps you trade it properly is customizing the trade plan to your particular emotional profile and psychological profile and the risk you can tolerate. Moving on to that from there, let's go look at the volume profile real quick. We just opened. So I'm going to stay on for an extra minute because I do want to take a look at these profiles, and then I will jump. Okay, on ES daily, here we go. Okay, this area down here, and we already found, again, it's a larger area, this area down here, all the way down to really this gap right here, okay? They're going to have to do a little bit of work to get through here, right? But if we get through here, we're going to have to go back quite a ways, but we already know the levels. I put them 26, 28, 27 specifically, and then about 19 to 22, somewhere in that range right here. I would expect responsive buyers. Below there we have 15, 17, 10, 12, I believe 05, 06, and then 1699, 1701. Right, but that would be a huge, that'd give us a 50-point down day from where we're trading right now, and another long liquidation day. I want to look very quickly at long liquidation days. We had a long liquidation day here. That was followed by 5 days of balance. Okay, so just one day, and then expecting a continuation of a move lower. Okay, certainly possible, but it doesn't happen very often. Usually we have at least 1 or 2 days of balance after a long liquidation days. Those days of balance can actually be quite wide range. This is over a 20-point range, right? This is over a, let's see, is that right? This is approximately a 20-point range. So plenty of trades. The difference being, right, long liquidation days, open high, close low. Trend days up, open low, close high. But most of these days, as you'll notice, close somewhere within the range of the day. They did. We had an exception here where we reversed and went higher, but it was still an inside day. So key nothing has changed, right? We are still one-timing the market all the way down so far, and that has not changed. We've been unable to penetrate the prior day's high. So I will know that something's afoot, that something's about to change as soon as we do get as soon as we do stop one timing in this particular case. To give a look at what that looked like going backwards, so we have a good way to understand that. If you'll look at this long liquidation day right here, all right, it was followed by 1, 2, 3, 4 days of balance. And notice that we even gapped up and had good movement here, right, in that period of time. But we were still essentially in balance. The very few of these days closed at their high or at their low, right? Meaning we were either getting this or we were getting this, okay, which plays strongly to our advantage, right? I like this. This is good. And then you'll notice we had the opposite of a long liquidation day. We had what essentially turned into a trend day up. This was a Fed day, so it's not exactly the greatest example, but it does show after a long liquidation day, we simply balanced, and then we had our next large move. I want to look at one more example to show what that can happen on those days. Give me just a second. We had another day, obviously here, we were still raging, and we had long liquidation day down. Then we reversed the long liquidation day, right? But you'll notice we were never able to get above, at least the next couple of days, above that the reversal of the long liquidation, but from the high of that long liquidation day, right? And then we balanced for 2 days before we made our next move. And one more example so you can see what's going on. Because again, I go over this and look, I actually take those dates and I open up the trade so I can see exactly what it looks like. Again, I'm not overly eager to be trading. I want to see what we do after the ISM number, and then I can make a decision. Let me find long liquidation day. Okay, here's another example. It's the inverse of a long liquidation, but we ended up with 2 days of balance after a trend day up. And then let's find, here's an example. We did trend up, but really when you look at this, it's pretty close to balancing over the course of the days. We had wide ranges each day, and we really didn't make significant progress from this day up. You can see from the way it distributed, we traded nicely across the range each day. Hold on one second. Let me see if I can find this for you. Okay. Great example again of where we can have a long liquidation day followed by balance day. This was pretty easy read because of the gap up. We had open drive. Again, not exactly balanced. It looked like two trend days in a row back to back, but really it started this whole balance period right here, just higher. I want to go back to a down market actually, so I can show you what a long liquidation day looks after in a market that's getting sold. And I think this is a pretty good example here, even though it's not a down market, right? Long liquidation day. We had 4 days that were actually lower after that, but if you look, they were all balance days, right? Even the 5th one when we fell out of balance was a balance day. Then we got down, and it was followed by a series of balance days. This is a lot of days where we're not trending, right? You can trade both sides of this on most days and get good trades, right? So even in down markets, right, long liquidation day, balance, you'll see this pattern repeat over and over. So I'm not looking for anything special other than the possibility of an open drive here, right? And then looking at the bigger picture, bring this all the way back. Okay, bigger picture areas. This area needs to be retested. Will it? I have no idea. If it tests, I would look for responsive, responsive sellers here. That's all the way up at 1820. That's a fantasy at this point, right? We're not getting up there anytime soon. This area is our next area of structure, right? If we were looking at this as an intraday chart, I would expect rejection here the first time into this area, and then I would expect second rejection up here, right? So we can come up like this and reject, or you can come up, reject, and then come all the way back up for a test up here, and then reject all the way down and continue lower, right? This is a normal trading pattern. Markets constantly. You see this area right here? Okay. Breakout, retest. This is a retest of this level right here. Didn't quite get there, but close enough, right? all the way back up. We came back down. We've broken. We came to the bottom of this area, right? Came down, rejected off, came up, then we've broken. It would make sense to come back up and test this area. Doesn't have to, right? You saw here, doesn't have to, but it would make sense to come and test this area, and then this area, and then continue on our way down. I can't stress enough, go back and look at gold and how it broke down. Took 8 months from the time it got to a top till the time it truly broke down and the short side was truly easy. Until then, we got a bunch of this. And then finally, at the end, sweep to the downside. Let's take a look at NQ real quick. Okay, NQ. Without going through the same scenarios, not necessarily on ES, obviously we know NQ tends to lead, right? So the first thing that I see that's very clear here is two things. There was a solid trend up here that was broken, right? We can get a backside test of that trend, number one. Secondly, there's a trend line right here, and we've essentially been holding that. So before we get this, we've got to break this. Number one, we haven't been able to do so. Secondly, this is the bottom of balance. We broke the bottom of this primary balance area, right? But just like here, and this is Fed day, right? First of all, we have a higher low in this break. And secondly, we're holding back above. It's going to be key for any further downside on ES or on NQ to get below and hold below 3450. So what do I want to see? I want to see us get below, and instead of popping back above and holding this, I want to see us get below, backside test, and go like this, right? And then I know each time we get up in this 3450 area, I probably can take a short in this area for a move to the downside. Conversely, if we roll down to 3450 area, right? And what was the low again today? 34.37. So again, they tried to break it today and found responsive buyers. We were down here in this area. As long as they can hold it above 34.50, buyers are actually in okay shape. All this looks like to me, right, is we broke out right here. We've retested right here, and it's certainly possible, right? Retest, back higher, and then it's possible that we could still go that way. Not saying that we will. I'm just saying certainly possible, right? So don't put a stake in this thing and turn bearish and go, we have to go down. We do not have to go down. It always looks ugly at the lows. We can certainly turn this thing around and start running back up and end up with these, you know, these long series of long days where we just get gap ups and goes. Okay? I don't see that happening right now, but the fact of the matter is that 99% of us do not see that happening, right? We always get bearish at the bottom and we get bullish at the top. And I want to be the opposite. I want to look when they're selling. I want to look for responsive buyers. Majority of the time, even in down markets, we get responsive buyers. So I'd rather see the market at least come back up and test something in this area, somewhere around here. And we may end up with just a wedge, right? If we get this wedge, we're getting lower highs. And then that might be what it takes to get that break lower. So these are possible scenarios I'm looking at and keeping an eye on the bigger picture so I can set my trades up properly. And then if we look at bigger picture, right? Okay, so if we get below here, clearly the next structure that's easy to see is this 3400 to 3350. Right here, again, I would expect if we got here, responsive buyers here, and then responsive buyers here, even if eventually we do this, okay? I do not assume the zone's going to break, and then we have this all the way down here at 3250. Again, I'm not looking for the market to go to zero. I'm not bearish. I'm just looking at levels below. Conversely, on the way up, right? So this is the top of this particular structure right here. I wouldn't be surprised to see this get retested, right? And obviously at 3455, we are messing around with the bottom of this more recent structure. However, remember, bigger picture, right? We're just on the bottom of this larger structure here, right? So first here, we need to hold, test here, and then that'd be followed by a test in this area. Again, responsive sellers first time in, then the top, responsive sellers, and then we get a question of do we go this way or do we come all the way back down to the range? The other thing I want y'all to notice, we can stay in balance, right? Remember November? We can stay in a balanced picture for a long freaking time. This is a month where we just traded sideways, right? So we do not have to get this straight up action, and we don't have to get straight down action. We can simply have consolidation. And if you look over the history of both NASDAQ and NDS, right? That type of scenario where we have these longer term playouts like this, that's more likely than anything else. And if that's the case, we'd want to bet on a lot of this stuff, right? Open drives, sellers, drives lower, buyers. And that's great because we make a lot of cash in that scenario, and I totally welcome it. Anyways, that's all I got today. I'm going to get to work and kind of take a look and see if I can set up any trades prior to the 9 a.m., which we have in 9 minutes. I was up really late last night. I'll probably be a lot less active today. And you're welcome, Chad. Congratulations. Chad got 2 points this morning. And no, I like 10:30 to open to 10:30 a.m. the best. And I like prior to 12 East Coast, 11 second best, right? And then I hate the afternoon. If I get a setup, it's got to be pretty sweet, or it's got to be really, really volatile morning with a wide range to make the afternoon good, because it gets real choppy. I hate losing money in the afternoon that I made in the morning. You only need 1 or 2 good trades to really build a super big trading account, assuming you have a plan for increasing your size and that you're disciplined enough to hit that same trade over and over and over. So anyways, my name is Simon. Y'all can hit me at tradeandperform@gmail.com. You can hit me on Twitter. You can hit me on StockTwits. I do my best I can to help everybody. My own trading has the first priority. My clients have second. Then comes everyone else. So have a great day, guys. Talk to y'all later.